The price of gold has risen recently to 6-year highs and silver to 3-year highs. But coming up on the rail are platinum and palladium. John Meyer joins us now from SP Angel, who has an interest in gold and silver through clients, I think, don't you? What do you mention first? What do you say to clients, first of all, about where the price of gold is going? Because clearly it's on an upward trajectory.
Yeah, it's always important to get the context right, and you don't really want to be buying stocks in a falling commodity market, although sometimes you can catch the falling knife, but it's a difficult thing to do. Clearly investors are much more interested in buying these stocks when gold prices or palladium prices start rising, and this has been quite a good environment over the last few months. I think investors are still warming to the idea of a stronger gold market going forwards, and actually we have some critical news out this week with the US Federal Reserve looking to potentially cut rates, and the ECB as well looking to probably cut rates further again.
Doesn't that give investors an opportunity to buy more risk rather than go into safe havens? I mean, I suppose part of it is why they're cutting interest rates and the sort of economic backdrop to some degree. But how do we work out what the messaging is for the gold markets from central banks?
Well, the way the market interprets these things is it says if a central bank's going to cut interest rates, there must be more risk in the global environment, there must be a bigger threat of recession. Therefore, we should follow that and actually take a risk-off attitude. Right. So you see these big hedge fund managers move. I mean, they should be playing clever instruments in the derivatives markets, but often they just hit the buy gold button. And we've seen a bit of that recently with huge purchases of gold ETFs. In fact, gold ETF purchases in the last quarter were double what they were a year ago. So big numbers there. And also central banks buying an awful lot of gold. The Poland central bank bought 100 tons of gold recently. I mean, that's a massive purchase. China's bought a lot more. Russia's bought a lot more. And that looks very good. But a whole suite of central banks buying gold and not really any of those guys selling it. So they clearly see this as a solid investment. And they're looking to protect their economies by doing that.
Yeah. So what sort of companies should we be looking at to take advantage of this higher gold price?
Well, there's no such thing as a risk-free gold mining company, sadly, but there are a series of smaller gold companies that I think have got sensible growth profiles going forwards. And Scott Gold, which is one of our clients and is looking to open the Canonish gold mine in Scotland in the first quarter next year, is a very sensible way to go.
Yeah. What about some of the other companies? Because my understanding is, before we move on to others particularly, that the smaller the company, the more difficult it is for it to increase production without raising prices. And the whole point of getting into a gold production company is that if the gold price lifts by $100 and you've already got $100 of profit in the bank on the price of gold, if gold price lifts by another 100, you've got a doubling of profit essentially. But what about the rising cost that goes along with the increase in production?
Well, there's always there's a temptation by the suppliers to put up their prices, but if you are able to increase gold production, then your unit costs should actually come down. So what you would hope to do as a gold miner is actually try and push your production ahead. And we've seen gold miners in Canada, the US, Russia increasing production over the last year. And in fact cutting back on gold hedging, which is interesting. Gold hedging, which is the selling of future gold production, often can hold gold mining companies back, and they've cut back on the amount of this they use. It's an insurance product in effect, and that's quite good. That helps to lift the market just on its own.
Mm. You mentioned Scott Gold. We've already shown this already. I want to show this again. This share price of Scott Gold. Now, obviously, it's a small cap company, so you get these days where not much happens, so you get these sort of big gaps in the market. But I'm interested as well to talk about this company, because this actually, if you overlay the price of gold on this, it looks pretty much the same. You've got a recent weakness coming through with the gold price just coming off recently. Anglo-Asian Mining is a completely different company. This is a big producer of gold, isn't it?
It's a bigger producer, and it's the only sensible producer in Azerbaijan. And there has been a story in the local press suggesting that there may be an acquisition or an offer made to acquire its assets. And possibly even the company, but certainly looking at the assets, and that of course is of interest to investors, and at the same time they produce a sensible dividend which investors like, and dividends are a great discipline for these sorts of companies.
And Anglo-Asian, you have a relationship with Anglo-Asian?
Yes, we are nomad and broker to the company.
Yeah. Interesting compare and contrast again between those two companies is that Anglo-Asian it pays a dividend and it's got this relatively high liquidity in terms of its overall share price, but unlike ScotGold, which is in a relatively safe political environment in Scotland, this is in Azerbaijan, which is, what's that like in terms of the investment environment there? Because when you're looking at some of the gold production now, because much of the gold has been taken away from some of the easier places to take it, from Canada and Australia and so forth, we're now looking at somewhat less stable places politically, aren't we?
Well, it's very stable. It's been run by the one guy for quite a long time, and his father ran it before then, and I'm not saying that everybody in the country is necessarily happy with that, but it certainly has a degree of stability that we might be envious of, given the situation with our own government, and probably more stable than the Scottish government might even be. So it's worked out very well for the company so far. Right,
okay. Any other companies to watch out for in the gold space?
Yeah, I think we should look at Orosur, which has a joint venture with Newmont Mining in Colombia. Nice project there. But that is at the exploration stage of things.
Very different shape share price. What's going on here? Is it because it's an exploration company? I mean, there's all sorts of unknowns when you're exploring.
They shut down an old mine that they had in Uruguay. It used to be called Uruguay Goldfields. The company was renamed. They have this interesting project in Colombia, and Newmont are there with investing in that, so they're paying for the development. And at the moment, because there hasn't been a lot of news flow coming out of the exploration of that, it's not so interesting for investors. But it is just down the road from another large project by Continental Gold, and that one's going really, really well. So it's quite likely that Newmont might say, who are also involved with Continental Gold, might say, we want some more of this trend.
You've got a relationship with Orosur as well, yes, haven't you?
Nomad and broker.
One other company I know we want to discuss is Bluebird Merchant. This is a company I've not really got involved with before, but interesting as it is, again, it's a client of yours?
It is, yes, and it's listed on the standard list of the stock exchange. Mm-hmm. And it's looking to open 2 former gold mines in South Korea. Now, it's an unusual thing. Not many people go into South Korea for mining, and the South Koreans themselves sort of forgot how to do much mining within the country. And these guys have gone in and they've looked at a couple of the old gold mines. They've seen that these mines closed when gold prices were very low historically, and they said, well, we can reopen these very simply. Go in and pull out quite a lot of the ore that was previously mined but not extracted from the mine, put in some small-scale processing plants, and they have a target to ramp that up to 100,000 ounces a year. Now, it'll start off small-scale, but they ought to be able to get into production within a year from now. They've just got their mine permit through, or their development permit through. There'll be a bit more on the environmental side that they'll need to sign off. But they're really very close to actually reopening the first of these 2 mines, and I think this looks like a really good project.
Yeah, this is the problem, isn't it, about these the gold price and some of these smaller mines, and people return to what had previously been uneconomic mines. All of a sudden the price goes up and they become economic again. Are we seeing a lot of companies bring on old mines like this because of the rise in the price of gold, which has meant that they become more economic?
We've seen quite a lot of this done in recent years, and done quite successfully, and many people will say the best place to find a mine is at the site of an old one or next to an existing one, and that is by and large true, certainly with copper and often with gold, is look close to where you are, and or just look at something that's been abandoned in the past and go back into it.
And is there a lot of money in the market waiting to go into these sort of companies, or is the money going into some of these new explorers with new opportunities?
Expert investors take them very seriously, because in this case you can walk into the mine, you can have a look at it, you can get a real feel for what is down there and the economics of mining that much more easily than you can with a new project.
I do want to quickly touch on the price of silver and other precious metals, because we've spoken about, I know at the top of the show I mentioned palladium and platinum as well. But spot silver, we've had this rise up, a bit like gold, we're off the highs. What about the silver market? How are you approaching that in terms of where the price is and what the opportunities are?
Well, my view is that silver is always in catch-up mode, and once in a while it will have a jump and catch up when the investors think it's fallen too but far behind. But it's really more of an industrial metal. It's a co-product of copper mining in many cases. There are some big silver mines in the world as well, but it is still used as the store of value. The problem with silver recently, I think, is a lot of jewellery demand has fallen back in some key markets in China and in the United States. And so I think silver suffers along with gold on that, although the fact is that there's been a lot more gold bought for investment purposes and central bank buying and that sort of stuff, which has outweighed the pullback in jewellery demand.
And of course the other thing you mentioned at the top is the fact that if we're facing potential global recession, I guess that industrial use will go down, so ultimately presumably that will be reflected in a lower silver price.
There would be a lessening of demand there, that's for sure. And it's difficult to know which factor is going to become more important. But when interest rates come down, as they surely will, silver is likely to rise alongside gold.
Yeah. What about palladium and platinum as well in terms of investment opportunities and their industrial use? Because my understanding is, and we're talking here about electric vehicles, we've spoken before, haven't we? Some of these other metals are used in that. Are we expected to see more of a downturn in palladium and platinum because of what we've just spoken about, the industrial side?
Well, palladium had a little jump earlier today, and in fact it's been doing relatively well. The Chinese cut back subsidies on electric vehicles, battery-powered electric vehicles, and what that means is more people, or proportionately more people, are buying gasoline cars again. Because not so many people want to buy diesel these days, but so more people are buying gasoline. Gasoline vehicles require more palladium in their catalysts, and so palladium is a real beneficiary of that. So the more these countries, China, UK, US, cut their subsidies for electric vehicles, the better gasoline will do in the short term. And I think although there are huge strides being made in battery technology at the moment, a lot of new production production capacity due to come in the electric vehicle side of things. I mean, Ford said they're going to bring in 6 new models. We know Volkswagen have got this huge multi-billion-dollar plan, and there's about 20 auto manufacturers with enormous plans, billion-dollar investments to get into the electric vehicle market. So that is coming at us quite fast. But in the meantime, in the next few years, I think gasoline vehicles are probably still very much in vogue.
And what about the use of platinum? Again, we've got this chart here. You can see actually the recent rise that we've seen all up to 997, not quite as high as we were back in February last year. So the gains seen in platinum have not been as nearly spectacular as we've seen in some of the other precious metals.
Well, platinum prices had really been held back because when people stopped buying diesel vehicles, the demand for platinum fell off hugely. But even gasoline-driven vehicles require a certain amount of platinum in the auto catalyst to go with the palladium and the rhodium. So typically these have a 3-way auto catalyst, which is platinum, palladium, rhodium, and there's more palladium in the gasoline vehicles and there's more platinum in the diesel vehicles. So it's just a question of what are people buying more of? Are they buying more gasoline or are they buying more diesel? And we know that for certain types of use, for vans, lorries, trucks, diesel is still the way to go. Gasoline is very much more in vogue for your consumer driver.
Yeah. Okay. All right. Look, John, we'll leave it there, but thanks for joining us. John Meyer is partner and mining analyst at SP Angel.